Welcome back, everyone. Let me ask you a question. What do you like more, receiving dividend income or watching it grow over time? For me, it's the latter. Don't get me wrong, I very much enjoy receiving dividends, but watching my dividends grow by $10, $20, or $100 from month to month is very rewarding. The best part of dividend growth is that for the most part, it requires no effort from my end. All of the hard work to find and invest in the right dividend stock was done at the beginning. Afterwards, dividend growth and compounding run on autopilot, providing a growing cash flow stream while accumulating my wealth. There's really only three ways through which your dividend income can grow. The first is you invest more capital into dividend paying stocks or funds. Number two, you reinvest your dividends. And number three, your holdings increase their dividend payouts. Today I'm going to focus on the last part, dividend increases. And when it comes to rising dividend payouts, not every company is equal, with a handful of great businesses standing far above the rest. I cast a wide net and found 80 dividend growth machines, companies that have not only increased their dividends consistently for a long time, but they have also done so at an above average rate. To make it onto this list of elite dividend compounding machines, a company must have at least a 10-year streak of dividend growth, and it must maintain a double-digit growth rate during the past decade. First, I'll provide some high-level stats on the entire dataset, and then we'll take a closer look at a handful of these companies. And if you'd like to see all of them, you can download the full spreadsheet using a link provided in the description below. Alright, let's dive in. The average dividend growth streak for these 80 companies is 17.8 years. Their average dividend yield is 1.79%, which I know is a bit on the low end. But there are a handful of more generous dividend payers amongst these 80 compounders. The average one-year dividend growth rate is a cool 19.46%. The 3-year dividend growth rate is 16.24%. The 5-year dividend growth rate is 15.35%. And the 10-year growth rate is 16.21%. These 80 companies have not only managed to grow their dividends at a very healthy pace during the past decade, they have also rewarded shareholders with above-average total returns. The average 10-year compounded annual growth rate for the list is a very respectable 16.73%. And even though they don't all pay generous dividend yields today, we all know that a solid and consistent dividend growth streak can really boost your yield on cost over time. The average 10-year yield on cost for the list is a very nice 6.91%. If you follow me on Patreon or Substack, you are likely familiar with my quality investable universe of dividend growth stocks. Well, 25 of the stocks on today's list are also part of the investable universe. You can check out my newsletter linked below, where I documented how the investable universe was built step by step. Alright, let's take a look at the individual companies now, and I'll start with what I call the legends. These are companies with at least a 50-year streak of dividend growth. Only 3 companies have been increasing their dividends for half a century or more, and still manage double-digit dividend growth in the last decade. This combination of longevity and speed is very rare. First up, we have Parker Hannifin, ticker symbol PH. This industrial powerhouse has a 69-year streak of dividend growth. It sports a modest yield of 0.98%. It has a 1-year dividend growth rate of 10.22%, a 3-year growth rate of 14.82%, a 5-year growth rate of 13.71%, and a 10-year growth rate of 10.94%. During the past decade, Parker Hannifin has also provided a very juicy 22.6% compounded annual growth rate, and it has boosted its yield on cost to a very pleasant 6.6%. Number 2 is Nordson Corporation, ticker symbol NDSN. This industrial stock has a 62-year history of dividend growth and sports a yield of 1.46%. It has a 1-year dividend growth rate of 14.71%, a 3-year growth rate of 15.22%, a 5-year growth rate of 15.47%, and a 10-year growth rate of 13.5%. During the past decade, Nordson has provided a 12.4% compounded annual growth rate and boosted its yield on cost to 3.16%. Rounding out the 3 legends, we have Automatic Data Processing, ticker symbol ADP. This technology stock has a 50-year streak of dividend growth. It sports a 1.99% dividend yield. The 1-year dividend growth rate stands at 10.46%. The 3-year growth rate is 14.13%. The 5-year growth rate is 11.33%, and the 10-year growth rate is 11.94%. ADP has compounded at a rate of 17% during the past decade, and grown its yield on cost to a cool 8.73%. 8 more companies on the list have increased their dividends for more than 25 years, while also maintaining a dividend growth pace of at least 10% during the past decade. They are Carlyle Companies Incorporated, ticker symbol CSL, with a 49-year streak of dividend growth and a 1.13% yield. Aflac, ticker symbol AFL, with a 43-year streak of dividend growth and a 2.33% yield. Cintas, ticker symbol CTAS, with a 41-year streak of dividend growth and a 0.81% yield. Badger Meter, ticker symbol BMI, with a 33-year streak of dividend growth and a 0.72% yield. Brown & Brown, ticker symbol BRO, with a 31-year streak of dividend growth and a 0.66% yield. NextEra Energy, ticker symbol NEE, also with a 31-year streak of dividend growth and a 3.19% yield. Bank OZK, ticker symbol OZK, with a 29-year streak of dividend growth and a 3.57% yield. And Fastenal, ticker symbol FAST, with a 26-year streak of dividend growth and a 1.91% yield. Out of these 8 companies, Badger Meter has the highest 1-year dividend growth rate at 25.93%. Carlyle has the best 3-year growth rate at 22.81%. Cintas has the best 5-year growth rate at 19.6%. And Cintas again has the best 10-year growth rate at 22.07%. What's interesting is that both Badger Meter and Brown & Brown are the only 2 out of these 8 companies that have accelerated their dividend growth during the past decade. I can tell this because their 5-year dividend growth rate is higher than their 10-year dividend growth rate. Also, the 3-year growth rate is higher than the 5-year, and the 1-year is higher than the 3-year. The other 6 companies have seen their dividend growth rates oscillate up and down, but still remain north of 10%. Cintas has definitely been the best stock to own during the past decade amongst these 8 companies, as it provided a 27.7% compounded annual growth rate. Badger Meter also performed swimmingly with a 21.6% CAGR. Bank OZK was the only loser here with a mere 4.1% CAGR. The best yield on cost goes to NextEra Energy with a very nice 9.79% yield on cost. Fastenal came in a very close second place with a 9.43% yield on cost. I know I'm jumping around here a bit, but remember, if you'd like to look at the full dataset, you can simply grab the spreadsheet using the link in the description. Alright, we have 69 more companies on this list. 5 of them have dividend growth streaks of more than 20 years. 17 have grown their dividends for at least 15 years. And the remaining 47 have a dividend growth streak between 10 and 14 years. I'm going to highlight some of the more notable data points now. Let's start with the best dividend yields. The best yield comes from NexPoint Residential Trust, ticker symbol NXRT, at 6.54%. In a close second place, we have Robert Half International, ticker symbol RHI, at 6.39%. Canadian Natural Resources, ticker symbol CNQ, rounds out the top 3 with a yield of 5.46%. 8 more companies have a yield in excess of 3%. 17 more have yields higher than 2%. 22 companies have yields between 1 and 2%. And 30 companies have a sub 1% yield. But remember, the focus here is on dividend growth and not the yield. The average yield for the dataset is just 1.79%, but the average yield on cost is a much nicer 6.91%. That's a pretty solid boost in the span of just 10 years. 4 of these companies would have grown their yield on cost above 20%. They were Federal Agricultural Mortgage Corporation, ticker symbol AGM, with a yield on cost of 27.75%. American Financial Group, ticker symbol AFG, with a yield on cost of 26.1%. Broadcom, ticker symbol AVGO, with a yield on cost of 22.5%. And NexPoint Residential Trust, with a yield on cost of 20.31%. Let's switch over and talk about some of the more exceptional dividend growth journeys. 2 companies on this list have actually grown their dividends consistently at a rate higher than 20%. The first is Comfort Systems, ticker symbol FIX, with a 10-year dividend growth rate of 20.37%, a 5-year growth rate of 29.62%, a 3-year growth rate of 42.36%, and a 1-year growth rate of 46.35%. The other company is Primerica, ticker symbol PRI. They have a 10-year dividend CAGR of 21.36%, a 5-year CAGR of 21.26%, a 3-year CAGR of 23.9%, and a 1-year CAGR of 38.58%. Amphenol, ticker symbol APH, was also very close to making this list, with its 1, 3, and 5-year dividend growth rates all exceeding 20%. But the 10-year CAGR was just shy, sitting at 18.11%. Now, I mentioned earlier that the average total return CAGR for the entire dataset was a cool 16.73%, but a handful of these companies have grown much faster than the rest. The absolute best return was delivered by Broadcom, that had a 10-year CAGR of 40.9%. Comfort Systems has a 10-year CAGR of 39.2%. KLA Corporation's CAGR is 35%. Lam Research clocked in at number 4 with a CAGR of 30.4%. And Microsoft rounds out the top 5 with a CAGR of 29.4%. 17 more companies all delivered CAGRs above 20%, and 15 more companies posted CAGRs above the dataset average. The bottom 10 companies had CAGRs below 10%, and there is only one company on the list with a negative CAGR. That company is Robert Half International. Each of these 80 companies had a wonderful dividend growth history during the past decade, and I think many of them have the potential to deliver just as great, if not better, results over the next decade. But just because a company has been on a strong growth streak doesn't mean it's fairly valued today, or poised to deliver a strong future return. In my opinion, the best way to invest in dividend growth stocks is to first figure out if the business is a quality business, then value the stock based on its free cash flow, and finally, estimate its future return potential. If you'd like to know exactly how I do this, you can check out my newsletter linked below, where I explain my process and share my high-quality dividend growth stock investable universe. I hope you enjoyed the content. If you did, please leave a like and subscribe. Thank you for watching, and see you next time.